Welcome to RANsquawk's e-morning briefing for Monday, the 6th of July 2009. Just taking you a quick run through of the weekend and overnight press and where we fare. Just heading through now, 8:30 in London. Starting off with the Asian session. Bank of Japan's Shirakawa, the governor there, said that many firms still face tight funding conditions and severe lending attitude currently by banks, reinforcing views that the BOJ will likely extend corporate financial support beyond September. Elsewhere, on a slightly more positive note though, coming out of Japan, the latest Bank of Japan upgrade in core economic assessment for the nation's regional economies. That's the first time they've seen an upgrade since October of 2006. As some signs of improvement have started to be seen in exports and production, with all 9 regions revising their assessment upwards, saying that economic conditions continue to be severe, although they have recently begun to stop worsening. That was overnight in Asia. One of the major themes, obviously, heading into the G8 summit in Italy has been the talk on the US dollar. France and Russia on Sunday urging a debate about the world's reserve currencies, but China have said that the dollar would keep its preeminence for many years to come. Most importantly, we have seen reactions in the markets, dollar strength, in part due to the Chinese Vice Minister He Yafei, who has said that US is still the most important and major reserve currency of the day, and that they believe that the situation will continue to be the case for many years to come. Looking elsewhere in terms of global news, Gordon Brown pretty much summing up in the FT the risk-averse trade that we're seeing so far this morning. Brown fearing an economic recovery is in peril. Brown saying he'll take a gloom-laden message to the G8 summit in Italy this week, saying that there are warning signs around the world that the fledgling recovery is in peril. Brown will also urge continued action to boost the global economy, according to government sources. In terms of European headlines, ECB's Trichet has said that commercial banks must pass to the rest of the economy the liquidity that they have access to from the ECB. He also said that deflation's risk has yet to materialise in Europe. Also, ECB's González Paramo has said that interest rates were appropriate, with some quarters of negative growth left ahead. Looking elsewhere in commodities, we have seen a stronger dollar at the moment, a bit of risk-averse trade across the board, allied as well the strength in the dollar in part from the Chinese comments, further positive rhetoric towards the currency there. And that has weighed on commodities across the board. In particular, WTI crude futures were already down over $2 and beneath 64.50. That's even in spite of further fresh attacks in the Niger Delta by the militant group MEND. Taking a look in the UK headlines, one of the major things we're seeing is gilt outperformance at the moment in the fixed income markets, and in the short sterling strip also trading higher, mainly coming in the wake of comments, obviously the Bank of England rate decision. That will be one of the major focuses for the week. Sunday Times and closely followed Shadow MPC opining that the bank will inject a further 25 billion in terms of their QE program, and they see the base rate to be maintained at 0.5%. Some members as well of the Shadow MPC did say that an additional 100 to 150 billion pounds worth of debt purchases was required once the current package has run its course. The Shadow MPC saying that QE is the only effective monetary policy instrument presently available to the authorities. And a quick look in the equity markets, oil and gas and basic materials are the underperforming sectors at the moment, being weighed upon by the sharp drop we've seen in commodities with the strength in the dollar this morning, and also following the stocks lower have been led by some key news in the banking sector as well. Financials, the third declining sector. The FSA, they're set to be given radical new powers as the government this week unveils its blueprint to police the city. The FSA is expected to give far-reaching authority to suspend and penalise workers and firms that break rules as part of the proposal of the Treasury's White Paper on Financial Regulations, as in the Sunday Telegraph. And for some of the banks that have been bailed out in the UK, chiefly Lloyds Banking Group and Royal Bank of Scotland, the UK Financial Investments, the UKFI, will say in a strategy document to be unveiled on Thursday they will only begin selling shares in both the banks once market confidence in the banking sector has been restored. Sources close to the UKFI said this weekend that senior officials involved in managing those particular discussions believe it could take up to 7 years before they could be sold back in their entire entity. Elsewhere as well on the banking side, SocGen in France gave an update this morning. They said it It expects to report a slightly positive net income in the second quarter, helped by its corporate and investment banking divisions. However, net banking income will be hurt by €1.3 billion write-down on CDS. SocGen shares in the CAC in France down around 2.8% last. So taking a look ahead to today, pretty quiet in terms of economic releases. We'll be eyeing the Eurozone Centex Investor Confidence, that's due at 9:30. 9:30 from the US today, 3 o'clock will be the ISM non-manufacturing report for June. And then in fixed income, we'll have reverse auctions out of both the Bank of England and the Fed, allied to the 10-year tips, $8 billion worth out of the US today.